Hello everyone, let me introduce myself. My name is Anindita Marisca with NPM 22,411,036. Here I will explain about bookkeeping and recording. Bookkeeping and recording are two key elements in tax administration that are regulated in tax law. Both of these things aim to ensure that taxpayers have accurate and transparent data on their income, expenses, and tax obligations. The government uses this data to ensure that tax obligations are carried out according to the rules, so that it can prevent tax manipulation or avoidance. Definition of bookkeeping and recording. Bookkeeping is the process of recording economic transactions systematically, usually in accordance with applicable accounting standards. The main goal is to produce complete financial statements, such as balance sheets and income statements. Bookkeeping is carried out by taxpayers who have a larger business scale or business entity. Recording is a simpler way of recording and is generally used by taxpayers with a smaller business scale. Recording only involves basic data, such as income and expenses, without having to prepare complete financial statements. Differences between bookkeeping and recording. The main difference between bookkeeping and recording lies in their complexity and scope. Bookkeeping is carried out by taxpayers who have income or turnover above a certain threshold and involves more complete financial reports. Bookkeeping is mandatory for corporate taxpayers, such as PT, CV, or other organizations. Recording, on the other hand, is intended for taxpayers who are not required to keep books. Recording is simpler and records income and expenses without following a complete financial report structure, usually carried out by individuals who do business or have small-scale businesses. The importance of bookkeeping and recording. Bookkeeping and recording play an important role in tax compliance because, tax compliance, it is the basis for correct tax reporting, ensuring that taxes are paid according to the provisions. Minimizing the risk of sanctions. Complete financial data can help reduce the risk of sanctions in the event of underpayment. Facilitating audits. Complete and well-organized data makes it easier for taxpayers to face tax audits. Bookkeeping and recording requirements in taxation. In carrying out bookkeeping or recording, there are several requirements that must be met, including honest and correct. Bookkeeping must reflect accurate financial conditions. Systematic and orderly. Data must be recorded neatly and consistently, in accordance with applicable accounting standards. Documented. Recorded transactions must be supported by valid evidence, such as invoices, receipts, or other documents. Who is required to keep books? Corporate taxpayers, such as PT and CV, are required to keep books, regardless of the amount of turnover. Individual taxpayers who run a business or freelance work are also required to keep books if their gross income exceeds a certain threshold. When is recording allowed? Recording is permitted for individual taxpayers who have a turnover below a certain threshold. They are not required to follow applicable accounting standards, but still need to record business income and expenses properly. This method is more flexible for small-scale businesses with simpler administration. Bookkeeping standards in taxation. In bookkeeping, taxpayers must follow generally accepted accounting principles, GAAP, which are the reference in preparing financial statements. In addition, taxpayers also need to report their bookkeeping results in the annual tax return, SPT, especially in the form of an annual report. Sanctions for non-compliance. Non-compliance in bookkeeping or recording can result in sanctions, including administrative sanctions in the form of fines or interest if taxpayers are late in reporting their taxes. Criminal sanctions apply if there is an element of tax avoidance or manipulation of financial data. This is usually imposed if there is a serious violation. Conclusion. Bookkeeping and recording in tax law aims to ensure taxpayer compliance and accountability in reporting their income. With orderly bookkeeping, taxpayers can be better prepared to face audits and minimize the risk of sanctions. Through discipline in bookkeeping and recording, it is hoped that taxpayers can play a role in increasing transparent and accountable tax revenues.